Hey guys, what is going on? Welcome into the video. So we had a big development in the stock market last week. I have a lot to get to in this one, including what different scenarios to expect next for the stock market, some economic data to watch out for, and then some individual trade ideas, mostly bearish and one bullish trade idea for the week ahead. And as a reminder, there are timestamps in the description for any part of the video that you want to skip to. Alright, so let's get into it. So starting out, in last week's video, we talked about this scenario for the broad market to potentially play out next, and that is exactly what played out last week. So this is where we're currently sitting on the S&P, and we have to ask ourselves which scenario will play out next. Number one, is this the classic breakout, retest, and upside continuation pattern, or is this a setup that will lead to a failure back below the major trend line, which if so, the market will see some pain up ahead. I've compared this possible scenario to the 2000s crash in a few past videos. During that crash, a lot of investors likely had the same mindset that many do now. Once there was a breakout above the key trend line, lots of bottom callers came out saying that the bear market was over. That breakout obviously ended up failing, and the market ended up falling another 30% from there. Now, I personally do not think that we're in for pain to that extent at all, but I do think it's smart to be cautious right now, as I've been talking about a lot for the past month or so. There's no scenario that can be ruled out at this point, just based on the economic data that we're seeing and how technicals are playing out right now. Taking a quick look at some recent economic data to explain why the market is in such a tough place right now. We know that CPI and PPI inflation data came in way above expectations 2 weeks ago, and this past week supported that data with a big upside beat on the PCE price index coming in at 5.4% versus the expected 5%, which showed a re-acceleration in the year-over-year number and in the month-over-month number. Lots of bulls wanted to see that number go negative once again, but instead we got a big positive number. Just 3 weeks ago, the market was pricing in less than 1% chance for a 50 basis point rate hike, and just in that time frame after all that economic data came out, the odds have increased up to 35.8% odds for a 50 basis point hike. This is a major factor showing up that the Fed has been surprised with these upside beats, and this is another data point that continues to scream that rates will be higher for longer. Alright, so now the main question is, how do we trade this action in the coming week? Now, I personally like using the S&P futures chart to be my main signal for being either bullish or bearish. It usually follows technicals pretty precisely, and if the S&P is downtrending, most individual stocks will be as well, and there's a high probability for breakdown trades to work. And same for if it's uptrending, most individual stocks will be as well, and there's a high probability for breakout trades to work. So a shorter term pattern to keep an eye on is over the past week, the S&P built out this broadening wedge pattern. Now this is an annoying pattern to trade overall. We usually prefer tightening action other than broadening action, but this usually plays out one of two ways, with either a break to the upside or a break to the downside. The more important patterns though are on larger time frames to watch. So the major development that played out last week was a failure of the bull flag and a failure of that white trendline support level from 3502, which was lows from the bear market so far. On the downside, the next key levels that I have are at 3950, which also lines up with the 200-day moving average, 3900, and then 3800. So zooming in here, for the next directional move, I'm watching either below 3950 to trigger the next leg lower for the market, and I'm watching 4000 to 4020 on the upside as the next key resistance. If that zone is reclaimed above, then it can set up the market for upside once again. Going over some scenarios now, I would lay out something like this for that base case bear scenario. This would see a relief bounce play out next to the 4000 to 4020 key resistance zone above, a rejection there, which leads to a move back to 3950 with a breakdown below to follow next. A possible bull scenario could look something like this. We see relief bounce next to test the previous bull flag, and then if it's able to reclaim back above that trend line, bulls could take back control and likely play out something like this, where that white trend line gets reclaimed above as well, and the market sees continuation to the upside. And we also cannot rule out something like this to play out, where we see some real choppy action between these two key levels before the market makes up its mind on the next directional move. My personal lean is continued downside. I think there's a good chance we see at least 3900, but of course we'll take it level to level to see what plays out next in the week ahead. Alright, so now let's get into some individual stock trade ideas for the week and weeks ahead, starting out with Tesla stock, ticker symbol TSLA. So starting out with a long-term view, so far this looks like a simple back test of the previous head and shoulders breakdown, which will act as new key resistance. And on smaller time frames, this looks a lot like a textbook accumulation off of lows, which is turning into a distribution pattern around $200 per share. Now there are a ton of similarities here. We had that false breakdown off lows and recently saw that false breakout at recent highs. And one more visual here, on smaller time frames, this is also potentially building out a head and shoulders topping pattern. So I'm personally liking Tesla a lot as a short or put option setup for the week and weeks ahead. But important to note that this coming Wednesday on March 1st, we have the Tesla Investor Day. Now historically, events like this have been sell the news events for Tesla stock, but of course anything can happen depending on what the company announces at the event. So for risk adverse traders, it may be smart to wait to trade this stock until after the event depending on risk tolerance. Alright, so the next potential short setup that I'm watching in the week ahead is Nvidia stock, ticker symbol NVDA, and this is a play based both on technical and fundamental factors. First off, Nvidia is trading back near bubble valuations with above a 50 forward price to earnings ratio with a declining earnings growth and flat revenue growth year over year. The company had a slight beat on earnings this past week, which resulted in a sizable gap up and is currently consolidating right above that major gap fill level at $230 per share. It is also rejecting off the rising wedge resistance once again, which is a bearish reversal setup and usually will play out with a breakdown to the downside. So zooming in, I think there are a lot of games being played here by market makers with this stock. Last week they ran stops on longs below 208 support, and then they gapped it right above the 230 level, which of course would run stop losses on shorts. I personally think they fake this out again where it can be a short opportunity back below $230 per share, where 220 would be the first target below, and then 208 to 210 below there as those initial target levels. Along with this possible Nvidia trade, the Semiconductor ETF, ticker symbol SMH, is potentially setting up bearish as well, with last week's lower high off the key 241.5 to 243.5 zone of previous support acting as new resistance, which is now building out a head and shoulders pattern. One to watch for another move to test the 230 to 233.75 zone below, where below there would trigger a breakdown and bring all semiconductor stocks down with it. The final bearish setup we're going to take a look at is Caterpillar, ticker symbol CAT. So this stock failed its recent breakout attempt and is looking set up to go lower from here, along with a bleak fundamental and economic outlook for that business model. I would watch for a scenario like this to play out next, maybe sees a relief bounce to either the 238 to 240 zone to make a lower high there before continued downside, or sees a little bit larger of a bounce to test that 50-day moving average above as new resistance, likely reject there before seeing that lower high and continued downside. For below targets, I'd be watching 225, the 221.7 gap fill, and then around 210 where the 200-day moving average is currently sitting. And before we close out the video, I want to throw out one potential bullish setup in here, and that is C3AI, ticker symbol AI. So this stock is essentially the poster child of the recent hype run for AI stocks, and if risk on comes back to the market, this has a chance to make another big run. So currently it's riding up along its 21 EMA as support, which is that green line on my chart and is currently bull flagging. It also has exactly what you want to see on the volume profile, heavy volume on the way up and declining volume on the pullback / consolidation phase. It's important to note that this reports earnings on Thursday of this week, so for lower risk, it would be smart to not hold a position through that event. But if a risk-on move does come back to the market, this would be a main focus for me as long as it holds that 21 EMA as support, or it could start another leg higher if so, above that white trendline resistance point. So that is everything that I'm watching for in the week ahead, including those possible scenarios to watch out for on that S&P futures chart, along with those trade ideas that are my main focus in the week ahead. Hope you all enjoyed and hope I provided some value to you. If so, make sure that like button and subscribe button. It helps me out a lot and I would greatly appreciate it. For anybody interested in joining the private Discord chat, that is the first link down in the description. To get my personal trade alerts, you can ask me any questions in there. And I send out nightly watch lists before each trading day. So if you're interested, that is the first link down in the description. Thanks so much for watching, guys. I will catch you next time. Good luck trading this week and peace out.